Awesome. What's up, everybody? We're back for another episode of Stonk Tonk. I'm here with my main man, Jonathan G. Broadhead, and my main dad, Bobby L. Broadhead. We are missing one key member of the posse, Michael Perenich. Perenicio, I believe is the correct way to pronounce it. He is trying to convince his youngest son that it is in fact 9 p.m. Eastern time, but he's having a hell of a time to do that, thanks to the time change. So, John, how was your
Yes.
week of stonk tonking by yourself?
Well, I tonked some decent stocks.
Yeah.
Well, my portfolio went up a little bit, about
Oh, did it?
2%. So yeah, not too bad.
Wait, did you say
Yep,
19%?
2%
2%.
over the last week. So hey, gained
Nice.
200
What?
bucks.
What was
If
such a driver of growth?
Hmm,
that happened every week, you'd be up 100% every year.
that's true. Looks like actually the ARK investments started going back up, which was
Oh,
nice.
did JP talk you into those as well?
Hmm.
He talked me into those.
Yeah. That the Vanguard mid cap did well, and Disney did really well too. So those are my top five that started kind of coming back. But yeah, I mean these are my kind of long term plans. I
Mm-hmm.
haven't done too much of funny money gambling,
Mm-hmm.
if of just choosing different stocks and seeing actually looking into them, see if they actually are worth anything, like this Roblox thing.
Yeah, I bought two of those.
Yeah,
I think I bought them at the mega peak.
probably. I just watched I watched that YouTuber Joseph Carlson. He
Mhm.
did a whole thing on like ARK invested 500,000 shares of it, and how like that investment is never going to like come to fruition just because of how they're so incredibly overvalued right now.
Mm.
Like for them to their comparison is what the hell is that other company?
Pets.com.
Pets.com. The comparison was Pets.com,
Was it
and
really?
how
I just made that
no,
up.
yes, I was kidding.
Oh.
It has two in the name. I can't remember it off the top of my head, but basically that company is like revenues in like the multi billions of 3 to 4 billion per year, and Roblox didn't hit $1 billion yet, and somehow they're valued at double what that other company is.
Mm. So you're saying I'm a genius for investing in them?
I mean, honestly, the whole thing is like they're still good. They're in rapid growth mode. They still
Mhm.
haven't actually turned a profit. All of they have their revenue sales have been going up and up, but they've been spending way more than they've actually been earning. So
Mhm.
eventually they will kind of plateau out and start making some money, kind of like what Tesla did in the beginning, everything like that. But just the return on investment that you're investing in now, there are safer bets ultimately. So yes, you're going to get some money off it because they're going to grow and they're going to do really well. But
Yeah.
the other options you have out there are probably more valuable to you.
Yeah. I got turned on to Roblox by reading the CNBC homepage, so thank
Ooh.
you, Dad, for that tip. I read a whole article about them, and apparently their long-term play is to create the Oasis from Ready Player One. That's what their value hinges on.
Well, yeah, I mean, they're basically, well, it's different than that. They're the YouTube of video games.
Oh,
They
that's an interesting way to look at it.
they are the place to say, hey, we're gonna host all of the environments, everything like that. You just build the shit and then sell some fun extra things. We'll pay you for that stuff.
Hmm.
So that it's basically like the same exact concepts as YouTube, but for video games.
Yeah, I feel like
Yeah.
John, are you on TikTok?
Nope.
No. Uh, I feel like TikTok is taking a huge chunk out of YouTube's business.
Why do you say that?
Okay, so you're not on TikTok, so you don't understand. I literally just got on like a month ago. But TikTok is the greatest way to discover things that you weren't aware of before. Because everything has to be 60 seconds or less, and all you do is just swipe up It's like a dating app for content. All you
That
do is
reminds
swipe
me
up.
of Fahrenheit 451, whatever the hell that is.
Why?
Well, because there's that whole monologue of the firefighter who's just like, yeah, well, people got bored of just reading the newspaper, and so things just got quicker and faster, and so there was never any actual meat to any story. It was just ended up being headlines, and then people discussing headlines of headlines. So you
Mhm.
actually never understood anything. You just wanted the quick hit.
Oh, that is 1,000%.
So, yeah.
But dude, I don't know. It's amazing. You can like it has like its own video editing software within
Mhm.
the program that's like super intuitive and super easy. Um, and it's just it forces every user who wants to create content, it forces them to become a short film maker. And I think that's kind of like next level game changer. Like YouTube, like you have to know how to edit with like Final Cut or Premiere or something.
Yeah. Yeah.
Um, People are
I mean,
so goddamn creative and hilarious.
no, I mean, I can understand like the concept of that, but like to actually get relevant information, it does take a little bit longer than 60 seconds. But I mean, outside of that, like, yeah, you can probably make $1 billion off of TikTok, but are there even ads? Like, how is that even monetized? I don't
There are
understand that.
ads, yeah. Probably like every 20th TikTok you see is like a sponsored ad, but even the ads are awesome.
Well, yeah, I mean, then how would you kind of correlate that to a particular channel? Or, I mean, I don't know. I'm sure there's some sort of algorithm or something that kind of gives you the
Uh,
creators some sort of.
yeah, I think it's based on the content that you like and the creators that you follow. Like that kind of dictates what TikToks you see or the algorithm
So
shows you.
just turns into another Twitter or Facebook where you're just in
But like
this.
it's better.
Because
Like okay, the I would
right
say
now it's so new that it doesn't know you yet.
yeah. Well, okay, so the big differentiator I would say for TikTok, like that separates it from every other social channel, is you don't have to follow people to
Mhm.
like find their content. Like on Instagram, you'd have to, someone would be like, "Oh, you got to follow this Instagram," and then like short of that friend telling you to follow that person on Instagram, like you're never gonna find their content. But TikTok is just like, "Hey, maybe you like this shit.
Yeah.
Here's like 15 to 60 seconds of their content. You're like, this is great or this sucks," and you just go from there. Dad,
Cool.
what was exciting in your world with the stock market this past week?
Absolutely nothing. It was all about real estate.
Oh yeah, you're buying a house.
Yeah.
Yeah.
How's that going?
Very scary.
Yeah.
Very, very scary because the agent we were using to buy the house was assigned to us by Zillow.
Oh.
And no idea who she was. And every communication with her was sketchy. So we wrote out our check and a commitment for $750,000. And she didn't communicate. And so I called the broker. And that when I rang his phone number, it said, "This number is no longer in existence."
Oh no.
So then I drilled down into the internet to Google the guy, and I found a second phone number, and it said, "This phone number is no longer operational." Oh, and then I'm thinking, oh, this is not good. And so then I paid $20 to go into one of these things where they drill down and find more information about the guy.
Oh, jeez.
And I found a phone number that worked, and I called him. And he went, I said, "Oh, hi, this is Bob Broadhead, your buyer. And, I just thought I'd call and introduce myself." And he went, "Oh, yeah. Oh, well, what?" So he was even sketchier. So I got him talking. Finally, found out he was in the Navy. on a destroyer during the 1990 Gulf War, and he was poisoned by fucking gas from the oil wells on fire, and that one of their ships accidentally shot down an Iranian civilian airliner and killed 224 people.
Oh my God.
Talk about some stonk tonks.
So he's a history professor at a local college, junior college.
Mm-hmm.
And so we talked about Mark Twain, his favorite author. I got him talking. Once I got him talking, then he finally spilled the beans on the sellers, the buyers, all that shit. So turns out he's legit. He just works part-time. He pretty much closed down his office, works from home. All of his numbers went dead.
So he didn't run off with $750,000.
Oh, it's at a flaky little title company with only 3 people in the office. So everything was coming up flaky, but it looks like it's getting more solid.
That's good.
So time will tell.
Well, shit. So, that sounds awful.
Yeah, well, let's add a little more icing to the cake. We're getting ready to get this house to sell. The roofers are coming and put a new roof on it. Then we're going to list it. Agents tell us that there's only 14 houses for sale in our zip code. And we're the only house above 2,200 square feet. So she thinks there'll be 100 buyers. Last time this happened, on the first day, they had 100 people wanting to buy the house.
Holy shit.
Wow.
So we're going to sell this house, and then the person selling us the new house could blow up, and then we'll be homeless.
Hey,
why don't you list it for like $800,000?
Yeah.
Yeah. Sellers market.
I mean, people are bidding up the prices on houses, and they're paying more than like $30,000, $40,000, $50,000. A house recently, they paid over $80,000 more than the listing.
Oh my God, that's crazy.
Cool. Hey, at least inflation doesn't exist.
Right. That's what we were just talking about on the phone. Part of it is inflation, right? And the other part of it is just the market's being ridiculous as it relates to real estate. Yeah. So, Bob, you think the market's going to pull back at some point with real estate?
Oh, yeah.
You think it's going to hurt?
Not for another, 6 months, probably. Because there's the big transition happening. The evacuation from California, and people headed to Texas, Idaho, Florida.
So Florida's real estate now.
Yeah, Florida's real estate.
Well, maybe just lagged behind.
No, Florida's real estate's moving up quickly.
Yeah.
Yeah.
I was just telling people that I was just saying that basically everything's inflated like $300,000.
Yeah.
Like across the board. Like my house, I could sell it for an additional like $300,000. But where do you move?
You should do that and slam it all in the GameStop.
Obviously.
Well, you should sell yours and buy mine for $550.
I should.
Pocket.
Yeah, I mean, you practically lived there when you were a kid.
That's true. The problem is I know how much semen's in that house.
Yeah, but you know how much of it is yours?
Probably 30%.
Yeah.
Well,
John's
heard about
50.
The gay whale.
What's that?
You heard about the gay whale?
Dad, you trying to get us canceled?
Yeah.
Dad,
that's a quick way to do it.
Canceled.
Okay. Yeah. I'll skip that one.
Dad, canceled on.
Actually, you might want to skip all your jokes.
Hey, you know how I know my roommate was gay?
See, now this one's fine. No one.
Obviously, if you're a connoisseur and you get a seasoned palate, you can tell us the rest of it.
You have a cold sore and it's kind of sore. What'd you say, Michael?
I said if you're a connoisseur and you have a seasoned palate, then you can tell us the rest of that story, John.
Your palate has a sore on it?
All right. So Perenich, right when you arrived, well, actually, JP, finish your story. Do you think you'll be able to close on the house or no?
Yeah, well, the guy was pretty confident. We actually rode our bikes over and talked to the lady that owned the house, and she's packing boxes. He says she's really slow. And we gave
Way
her...
to intimidate them by riding a bike over there.
Yeah.
Yeah, we rode our
Your
bicycles.
power, your physical power.
$2.
It was good. So we think it's gonna go through. We think it's gonna roll. But he warned us that she was very slow to list, and but she's got her kids helping her pack her boxes up, and the falling down around her, so she needs to get out of there.
Chad, maybe it's like one of those seat yourself restaurants where if you just kind of like stare at the people that are done, they'll like get up and leave quicker. So maybe if you guys just ride by every day and menacingly look in her windows.
Hey, John Paul, maybe if she's hot enough, she can just stay there.
Well, she's 5 years old, so.
I said, is she hot?
Age is irrelevant.
I mean, don't. Never mind.
Hey, JP, I want to ask a quick question. Sorry to cut you off, Perenich.
Yeah.
JP, is a house a good investment?
Ooh, that's a good
Obviously,
question.
I don't own a house. John owns a house. Michael owns a house. You own a house currently. You may be homeless soon.
Multiple houses.
Is a house a good investment?
Well, okay, let me give you an example. So let's say we paid $250 for this house, and then we put $50,000 in remodel the kitchen, and then we put $25,000 into fixing the pool, and then we put $10,000 pool deck, and then we rebuilt the roof 2 times, so that's $30,000, and then we repainted it several times inside. Now that's another $15,000-$20,000. So if you add it all up, it's about a break even. And then on top of that, you get to pay, let's say you get to pay $6,000 a year in real estate taxes and $3,000 a year in insurance. So that's between $9,000 and $10,000 a year in reoccurring expense. So it's kind of a funny wash. Now, the one good thing is when you sell, the government gives you the first $500,000 of profit on your house, tax free.
If you roll it into another house, right? No?
The first $500,000 tax free.
But isn't there an additional rule that if you roll it into another house, like you don't have to worry about capital gains?
That's rental property, yes. A 1035 exchange rental property. You can skip the capital gain if you're rolling a rental property into another rental property. But the first personal residence gets $500,000 of long-term gain. Actually, the first $1,000 of profits tax forgiven, tax free. So that kind of takes up some of the slack on all the expenses of owning a house. Mm-hmm. But house is not a good purchase for a young person unless they're anchored to that location for minimum 5 years. So if there's a chance that your career is going to take you away from a location in less than 5 years, you shouldn't own a house.
Is that due to the amortization schedule?
And it's due to the variability in the pricing of real estate and the chance that you could lose $100,000 in 3 years when you go to sell. Or 4 years.
I think a lot of people are going to be losing their assets. At some point, I just believe that You get a backlog of 10 million people who are not paying their mortgage. And let's say half those people, generously saying that half of them are just not paying because they don't have to, right? They're taking advantage of the situation. Let's just say, I don't think it's half, but let's just say for the sake of this conversation, even if half of them default, there's going to be a flood of the market of homes that people are being kicked out of because they can no longer afford them. And I think that that's going to cause a change in the market, regardless of where you are.
Well, I think that's going to affect mostly the entry-level houses, the first-time buyer houses, the under the 2,000 square foot homes, and all of those are being snatched up by corporations that are building these into portfolios of unit investment trusts, of REITs, of residential houses, in which they buy them cheap, they fix them up a little bit, and they put tenants in them and rent them, and then they package it up and sell it, and it becomes an income property REIT, real estate investment trust, trades on the New York Exchange.
Or do you feel that REITs are decent investments as far as the ones that trade?
Not especially now. Interest rates are quite low, so the return on investment is based on the overpricing of the underlying assets. Not the greatest.
So
I purchased. Oh, go ahead.
Yeah.
Well, Mike, finish your thought. I was gonna take it in.
My thought was I'd purchased Washington Prime Group some time ago on the exchange, and it went up significantly. I purchased it for like, I don't know, $3. Oh, there was a reverse split, and then they declared bankruptcy. And I pulled out like right before I lost any money. I actually sold a few off so I didn't lose too much money. But I thought, I'm going to stay away from these REITs. My feeling was a lot of the commercial real estate has gone bye-bye due to COVID. And I thought people are going to start re-inhabiting these places. Amazon's going to buy these buildings and store their boxes there or whatever. So my thought was, okay, maybe I'll throw some money at those things in hopes that the real estate goes back up for especially like commercial and everything. But I haven't seen that really. There was another one, Pennsylvania something, Pennsylvania Real Estate Investment Trust, which I purchased some of that when it was like dirt cheap. But
was that B&O Railroad as well?
Yeah, it was Baltic Avenue.
I mean, Mike, like these are kind of short-term investments you're looking at. I'm assuming, like, have you thought of these other organizations? I mean, I know Realty Income themselves, stock ticker is O. They have a really good dividend, and they have actually been doing really well over the last. I mean, they had a huge drop, obviously, in the beginning of 2020, but I mean, they've pretty much stuck pretty strong to all of their investments. They own a lot of a lot of commercial real estate places. Like I think they had like some JCPenney places. They had some like Macy's places. They had a lot of places that like were in malls and stuff. But they have a whole bunch of like small shops as well. And so maybe like the actual company itself may not grow too much, but if you're looking for like a dividend investing, like that is a fantastic opportunity there.
Yeah, I would have to disagree.
Yeah.
What do you know, JP?
As an example, so the ConnectWise and the company you work for, John.
I will not be named here.
a lot of the people that work for that company are working from home. Correct? So the building is more vacant than it should be. Well, it's being underutilized.
Yes. Right? Yes.
Okay.
That is offices. I'm talking about storefronts and things that actually have had to have foot traffic in.
Commercial real estate in general. So now COVID ends in 6 months and everybody's got their vaccination. what percentage of the people that work from home decide to go back to the office? Given the choice, they don't have to go, they can stay home.
40%.
Okay, so that company is now holding excessive real estate for the needs to produce their product, to sell their products.
We're discussing very different things.
So Raymond James has 7,000 employees in St. Petersburg. There's about 500 people in those 3 office buildings. And when COVID's over and they allow people to come back, it's estimated only 50 to 60% will come back. Well, they're going to have 3 buildings. They're only going to need 2 at the most. So who is going to come in and fill those buildings? Because this is happening all over the country, that employees are choosing to work from home. And when a company has the opportunity for you to pay your own goddamn rent instead of the company paying rent, they're going to say, well, let's save the money. So this is going to produce a gigantic over volume of, vacant commercial real estate. So it's not easily going to fix that problem. That's a problem.
You're talking about office space specifically. I'm talking about foot traffic stores like GameStop, like Walgreens, like malls, like things like that.
So what's happening in retail? J.C. Penney's on the verge of going bankrupt.
Well, that was a bad example, but still.
And
GameStop's looking good though.
Pandemic, everybody learned how to buy from Amazon, or buy from Walmart delivery or from Target delivery. As those stores do more delivery, they need less retail store. So all real estate to me is a bad investment for the foreseeable future, for the next 2 or 3 years, until that reaches equilibrium, because the demand for those empty spaces comes back. So I think it's one of the worst things is commercial real estate.
How do I share my desktop on this?
I might have to.
There we go.
Give you permission.
Oh no, it should be good. Can you share it?
You disabled it apparently.
Oh, okay. There you go. Try now.
At this point, you're not using your cell phone.
No. So one of the investments I was looking into is realty income. I mean, they have a great dividend. And then one thing to know about REITs is they are they don't pay any taxes on they don't pay, or what's the word I'm looking for? But basically, they push the taxes onto you, and so they have to pay 90% of their earnings in order for them to not pay taxes. And so this particular company, Realty Income, I mean, they own shops like their biggest holding is Walgreens, 7-Eleven, like all of these stores that are always going to be in need. They're these small pharmacies, small they own Home Depot, 22.
They hold AMC.
Depot, AMC, FedEx,
I like it.
Dollar Tree, LA Fitness, like all of these things. And so stuff like that, like, yeah, sure, office buildings, I 100% agree. Like, there's no reason to ever invest in that, because right now that edge never coming back.
The Realty Income might be the exception to the rule, because these are not buildings that have been vacated because of COVID.
Right.
So they're still operational. But one of the problems with REITs is in the chart. It's not in the income. So unless that income can go up on a regular basis, the NAV of the ETF, or the price per share, if you look at a 10-year chart, oftentimes is flat or can even decline. So if you were to bring up the 10-year chart on that REIT, it may not look very impressive. Now, if it does go up, if it's rising, then it might be a decent REIT. But the only REITs that drag up their value are the ones that have stores that raise dividends raise their rents consistently enough for the NAV to go up. And so what's this time frame?
So this is what, since 94?
John, you should have invested in 2001, man. You really
I know.
messed up.
You should have invested in 95.
Or in the beginning of 2018.
Okay, so from 2010, it went from about 20 to today.
About 25 to
50.
I mean, it's not a ton of growth, but
no, but the thing is, like, this is one of the big dividend yields, because look at this. This is almost 5%. So this is a solid company to invest in, just because of they have always done a very, very good dividend.
That's like the rule. So that one is paying 5% in and just to go up. So I would, any kind of dip, I'd buy that one.
Yeah.
For income. But you know, at your stage of the game, I might be looking more at growth. But it wouldn't hurt to put a little bit of that in your portfolio.
Yeah, I mean,
that's a good one. You did good research on that, John.
Hey, John Paul, I have a question for you. When you were a stockbroker, did you do any options trading?
They're called stonks, Mike.
Stonks trading. Stonk options.
Some of my associates did covered call writing. And if you look at covered call writing, generally what happens is the investor gets a higher income, but he loses some principal over time. So mathematically, it's not good. Sensational-wise, it's attractive. Novice investors often get sucked into covered call writing. And so they're not bad, they're just not very good.
Have you done any on your personal portfolio?
I've never done it myself.
You never lived.
I know the history of covered call writing. The options trader, you know, can kind of take advantage of the situation. And so you end up spending your principal thinking that it's a pure income. And oftentimes it's only partially income from the option writing, and the rest is losing value of the portfolio. So you can bring up any mutual fund that's a covered call writing mutual fund, and over a 10 or 15 years, not a pretty chart. It's usually disappointing.
Hey, Dad, I want to ask a quick question. Mike, are you good? Are you set with that last question?
That's good. Yeah.
Okay. Hey, Dad, quick question. So, like, we've had a lot of chats about buying a house, and you've always been like, I don't think it's the best investment. Why did you buy a house?
What about 3 houses? Because at some point you did own 3 houses now.
Oh, I think he owned 4.
4?
He had 2 rental properties. Dad, did you hear me?
Yeah. Me? How many houses do I have?
No, why like you've told me over the years, like, buying a house is not that great, especially for someone with my alternative lifestyle. Why did you buy a house?
You're not anchored to a location for minimum 5 years.
Yeah.
The chance of losing that house is just as likely as making money on it.
Mm-hmm.
So if you own a house for 5 years, the probability is it's going to go up enough to pay you back for that holding period. Say,
but why did you buy a house? Like,
because I knew I was stuck here.
Yeah.
I was with the company, and I was going to stay with the company for the long haul.
Mm-hmm.
And I stayed 25 years.
Yeah. So at that point, it was a good investment for you?
Yeah. I mean,
what about
I didn't make money on every property I had, but between the utility of a house, is you own it, you don't have to call a landlord when something breaks. You just get it done, and you get to reap the benefit of long-term capital gains which is tax advantaged when you sell, or more recently tax free on the first 500,000. That's an advantage. So the cost of owning a house and the cost of renting a house are fairly close. Okay, for most people, unless you're shrewd like you've been. So given the opportunity to buy a house only if you're going to be there 4 or 5 years, if you're going to be there less because you don't know your career might change, then renting, which is to give up the appreciation, but also give up the chance of losing money and not have to pay the extra bills when the real estate taxes go up and yada, yada, yada. You might see a slight increase in rent over time, but you don't get hit with, big expenses.
Mm-hmm.
But you purchased 2 investment properties, right? Which you rented out. What was the thought process behind that?
Ooh, good question.
I had 5 or 6.
Like I said,
I built a couple of houses in, up in Tarpon, down in South Clearwater. I built a duplex, and then I bought a new house in Holiday and rented it. And I bought a couple of fixer-uppers. So I bought a lot of real estate when I was in the 80s, in the 1980s, because it was basically Chris's college fund and John's college fund. So I bought.
Wait, you gambled with our college fund?
Yeah. Yeah, I took $10,000 and I bought a lot in Tarpon Springs, and I built a house, and that was for Christopher. And then 2 years later, when John was born, 87, I bought another one. And so those houses I kept until they were going to college for 18 years, and I sold them.
Quick question. What's it like having money when you have a kid?
Well, okay, if you don't have money and you have a kid, it's a nightmare.
Cool.
If you have a kid and you have enough money to pay for most of the stuff, it's not terrible. But
that must be nice. Boomer.
Yeah.
It was the Mercedes 80s, baby.
Yeah.
Money was just falling from the sky.
Dad,
everyone I know who kind of worked hard in the 80s, like, made tons of money. I was like, yeah, I was just there and I made $300,000 a year.
And they're like, pick yourself up by your bootstraps, you lazy millennial.
That's literally impossible.
Hey,
Well,
to zoom in on this, Dad, why did you invest in a house for us kids? Why didn't you just put that money in the market?
Well, I did both because, I had enough income to do both things at the same time. Mm-hmm. And prior to that, I had a history of making money in California real estate. I lived there.
Yeah.
Because I was buying fixer-uppers for 50 grand and painting and carpeting and selling them for 80 grand. Mm. And then I'd buy another one. So I had 3 or 4 homes in California. And but I knew I was going to be there 5 years or longer. So California real estate was moving up, not at a fast pace, but at a predictable pace. And there were fixie-uppy houses that I could go in and paint them myself, get them recarpeted, make them look pretty, rent them, and the rent would pay the mortgage and a little bit extra. And then 3, 4, 5 years later, boom, I'd sell them and make a little cash. So I didn't make a lot. I made about between 15 and 20% net. So it wasn't huge.
Could you still pull off that same shenanigan today?
No.
No.
Because the flipper market that got really, really sophisticated.
Yeah.
My sister Edie knows how to do it. So up in Tennessee, she's doing it quite successfully. She's flipping houses. Mm-hmm. She's using a very sophisticated leasing buyback format.
Which is to have like $1 billion and be like, hey, we should buy these houses and you buy them from us.
doesn't even have enough money to do what she does. She just has a line of credit, and she.
Yeah, John, Dee Dee doesn't have any money.
Well, it doesn't matter. She has other people's money. That's all that fucking matters.
Why can't you get other people's money, John?
Because nobody knows me.
Well, that's why you're on Stonk Tonk.
I know you. I know you, and I'm still not giving you my money.
Money, please.
Well, John, you've accumulated a lot of money just the old-fashioned way with your 401k and your
selling your body.
You've done well.
I mean, wish it was better.
Okay, so we got 10 minutes left before I pull the plug on this.
Yeah.
You still talk about real estate, or you want to talk about stocks we're excited about?
Yeah, let's talk about some stocks we're excited about.
All right.
Perenich, why don't you go first?
No problem. I came, I went, I saw, and I came again. I obviously still ride in GME, AMC, obviously, and reinvested in those. Okay,
hot take.
Very hot take. But I said this 2-3 weeks ago. APPS, Digital Turbine. This company I still think is undervalued. I bought a bunch at like 75 at the height of the market. And then it took a nice dip last week, or the week before last. And it went down in the mid 60s, and I bought a bunch more. It's now up at $87. So I averaged down to about 70, and I've made some decent money on this. The stock was like a month ago was rolling around at like $95, and then all the tech stocks went down. So I'm pretty bullish on this. I think it's going to make some good jumps. I was talking to a buddy of mine. I think that it may get close to doubling by the end of the year. So I've already made a decent amount of money on it. So I'm really down with that. And MVIS, I think, is going to be a good stock. So more tech stocks, obviously, but and Carnival is doing well for me. So and I'm going to keep riding that. I just sold Goodyear Tire, and because that merged with Cooper, and I made a decent amount of money on that. So those are the ones I'm kind of excited about.
Like, where are you getting all these stock tips? Every time I talk to you, there's like 9 new stocks I've never heard you talk about before.
You should see my portfolio. It's like you just keep scrolling. Honestly, I'll talk to someone and like they'll tell me something. Like John told me about and I'm like, I could probably put a few bucks on that. You know what I mean? Like,
I mean, shit.
But like honestly, that's how it is. Like, if I like the way it looks and I like the way it sounds, and I do a little bit of research and everything kind of pans out, I think, well, that sounds good. Like,
but the question I have for you is just like, what is your research? Like, how do you actually validate the stuff other than like
what the fuck is that?
Someone saying, hey, this sounds cool, and you say, hey, that chart looks like it's going up. Sounds good.
Like, how many times do you have to explain this to John? Like, research is not fun.
No. What do I look like? I mean, here's part of it. I'm going to be real honest here for a hot minute. Someone I know who's made a lot of money in the market, like I know a few guys like that. I was talking to a buddy, and he was telling me he did a lot of options trading, and he's very into the market. And he's like, oh, you should throw some money into DraftKings and Bets. It's a ETF for like online betting. And I'm like, oh, well, this guy, he knows a lot. Like, this is all he does. So like, he wouldn't just tell me to put money in it. And I don't put like I'm not putting like $100,000 into it. I'm putting like a couple bucks, and if I make like $40-$50 and I do that 100 times like a year, I mean, that's a little bit of money. It's enough for a car payment.
That's a lot of money.
It's $50.
Oh God, I hate that.
Yeah, I bet you also hate having fun and betting on Super Bowls and going to the Hard Rock.
It's just a bad investing idea. Like I don't know. Like how are you going to consistently be able to get the same returns you're trying to do right now? Like, hey, yes, you know these people right now in this moment in time, but you're losing money because you're not
John, let me
capital
stop you
gains.
right there. How many GameStops do you have?
Yeah.
None.
Thank you.
0.
Thank
I own
you.
0 GameStonk right now. It's
That's
just
your
like,
problem.
the thing that kills me is like, you know nothing about these companies. Someone says, hey, this sounds cool. That's great.
Dude,
So, but you don't know when to sell. Like, these people have bought into it
exit
months
strategy?
earlier, so they've already gotten gains and common gains. And sure, it may go up a little bit higher, but you could fucking lose everything you invest in that.
You could lose 50s of dollars, Perenich.
Well, here's the thing: is that I do some research. Like, I'm not doing any research. I do some research. I just wouldn't say that I'm like, you laid out a nice process of going through research last week, and I think that that's good. I think if you're going to put like $5,000 into a certain stock, you should do that. But like, you talk to a few people, you do some research, and honestly, one of the things I like to do is I like to go on like StockWits and Yahoo and see what people are saying about it. And I know people are pumping up the stocks, and I know people are pumping down the stocks, but sometimes people are passing on good news. And so if you look at some of the news that people are talking about, and then you look at it to substantiate it, you'll find that like, oh, okay, this is interesting. A lot of people are talking about this, and sometimes it's legit. And other times it's not.
The whole question is like, you don't know when to sell on these stocks. You know nothing about the business. You know
as soon as
nothing
it
about any of
doubles,
this
you
stuff.
sell.
Like clockwork.
I mean, who knows when to sell? This is one of these questions we got to ask John Paul. When do I pull out? I have 3 kids. I'm still trying to figure out when to pull out.
Yeah, dude. Oh man.
So like that's a question, but like I said,
avoid the issue completely. Wear a condom.
Now he tells you.
Fuck.
Wait, what's a condom?
I'm not a sailor.
And how do I invest in it? Are you telling me to invest in condoms?
What's
It's gonna be big.
Fell from a naked spread.
It's a naked call.
All right, cool. So we got about 3 minutes left before I'm pulling the plug on you, shenanigans.
All right. What do you guys think of these NFTs, these non-fungible tokens?
Yeah, John, you're excited about that. Tell us why you're excited about that.
Well, I mean, I just literally just started looking into it recently. Basically, non-fungible tokens are a form of Bitcoin in a way, where it's just like, hey, we're going to put a super ridiculous serial code on this particular piece of digital art, and now that code is your proof of purchase. And so my idea with that, I know next to nothing about this, so don't take it with a grain of salt.
You fit perfect in this show, John.
Excellent. Is that like, how would that not be fantastic for if, hey, I bought Final Fantasy VII on my PlayStation 17, but I want to give it to my grandson because it's the greatest game of all time. Mm-hmm. Like, here's my NFT for that. Now you have that, and I can use it. I can
Dude,
whatever.
That's
like
fucking genius. Because like I've bought so many of the same movie. I've bought Dark Knight 4 times.
4 fucking times.
Or it comes out in a better version, and it's like if I could just buy that once and then like, oh, Chris owns this movie, that would be awesome.
Exactly. So like that's my concept of NFTs right now, is like that the way to actually pass on the shit you actually buy that's digital in real life, but like being able to give it to whoever else you want. Like that is the GameStop of fucking the future.
All right, so put more money in GameStop. I got
it. So I mean, that's what I'm curious about, and see how that goes.
If I'm John, I would put a little bit of money on a couple of those and just watch them.
Well, what sucks is NFTs, like it's a specific Bitcoin itself. Like you can't actually just buy like an ETF of different Bitcoins. It's like, hey, you bought a Banksy picture. That's it.
Well, who's going to run it up?
The fucking Mark Cuban.
Oh,
Mark Cuban.
Well, it's good.
The GameCube.
But all, unless it's something of notoriety, value, or common knowledge of appreciation.
Well, I was trying to find like the technology creator, but because it's open source, you can't invest in it. That's the thing that's killing me. It's just like I want to invest in that technology, but you can't.
Yeah. Well, John, make something that makes it so you can invest in that technology.
I'll invest in
Deal.
it as long as you tell me to.
Mike thought about it and he's in.
I'm
Yep.
in. That's all I got to hear. I mean, like if I look it up and it has more than 5 employees and like a market cap of like over $50, I'm in.
Even that's kind of like overboard for research that we generally recommend. All right, it was officially time to call the show. I wanna just check in with JP real quick. JP, what are you watching with the market for this upcoming week?
Oh,
Anything fun?
Well, I'm thinking about dividend stocks. And
Keep in mind he's 70.
Like VYM and VIG dividend stocks, and hoping for a pull down there to get in, because they're whenever you see the market go down, like technology is going down, but the dividend stocks are bucking the trend and going up, then you're sort of it's the hint of a rotation away from the high growth sector into the traditional recovery stocks, economic recovery stocks, like dividend stocks. So could be the beginning of a long rotation into traditional stocks and away from the super high growth technology stocks.
So
buy more Tesla.
Yeah. No, I would be steering clear of the super radical technology at this point, unless it took a real big nosedive. Then I'd jump in. But yeah, that's what I'm thinking.
Hell yeah, love it. All right, well, this was fun, you guys. Let's do this again every Sunday night that y'all can. Love you, Mo Effers.
I love you too, my friend.
Peace out. Thanks for doing this.
Out.
Later, guys.
Thanks for having me.
Later, dudes.
See ya.